It's been an incredible few weeks in these markets. We started with the US election. Since then, we've had two vaccine announcements, and Pfizer, even today, announcing that their vaccine is actually even more effective than it previously pictured. It's now more than 94, maybe 95% effective. So a little bit more good news for these markets. Now, the impact that all of this is having on the markets has been really interesting, focusing really on the US dollar, which has had knock-on effects across a range of these markets. What was really interesting was the impact that the vaccine itself had on the US dollar. The dollar, which has for most of this year been a safe haven. It's been that risk-averse instrument that's done well throughout periods of turmoil. But we see the news of this vaccine, and rather than seeing the dollar sell off because we saw so much optimism on the back of that, of course, from Pfizer and then Moderna, we actually saw the dollar doing relatively well. And the reason for this was US Treasury yields, which did rise in the aftermath of this announcement. Now, looking closer into the details, it seems that traders view this as being a positive economic development, which of course it is, which means that rates may not stay as low for as long as had been previously anticipated. The success of these vaccines in these early stages, and there's still more companies that could announce in the coming weeks, does enable the global economy to get back on its feet, hopefully sooner rather than later, and gives us a more sustainable environment in which we can thrive within. Now, that's obviously not been possible until now. We've had lockdowns and we've had reopenings, and now we're back in lockdown scenario again. So this does give us a more sustainable route out. And the fact that this could come a little bit earlier than people were anticipating gave a massive lift to these markets, but it also did give a little bit of a temporary lift to the US dollar. But what's interesting is that it has seen some downside since then. Now, I think this is just part of the broader downside dollar trend that we have been seeing. So it has remained under a little bit of pressure, and some of the other currencies have performed a little bit better. The one I'm going to focus on today is the pound. The reason being that not only have we seen a lot of movement in the US dollar recently, but we're also entering a really important period as far as the UK is concerned. 4.5 years of talks around Brexit, June 23rd, 2016, when the vote actually happened. And now 4.5 years on, it seems like we're finally getting to the point when we can put the whole situation behind us. The UK can move on outside of the European Union, and the rest of us can move on with our lives as well. Now, it seems that a deal is very close to being reached. It's gone quiet the last few weeks on the more public side of things, and I think that's an encouraging development, because it suggests that the talks are now hitting an intense period and a time for public brinkmanship has passed. And I think that's really been reflected in the currency. But the report suggests that it could be early next week when a deal is officially announced. So that's a good sign. It gives plenty of time for this deal to be ratified by EU Parliament and by the UK Parliament as well. And I think that's going to be a real positive sign for both the EU and most importantly, the UK, because it obviously stands to lose a lot in the event of a no-deal Brexit, particularly in the midst of a global pandemic. So I think this has been a real positive development over the last few weeks for the currency, and we are seeing the pound trading towards the upper end of its ranges, currently pushing the 133 mark. 134 is the key. That's the longer term level of resistance. If we can break above here on a deal, then there could be a nice bit of upside potentially to be had as far as the pound is concerned. Some lost ground to be made up over the last 4.5 years. So it all really hangs, as far as the pound's concerned, on that Brexit deal. What is interesting is, though, that people now expecting a deal for the first time in a few years. The broad scope across these markets is that a deal will be done, and therefore I think it's quite priced in at this point. I think that the upside, while it could break through 134, for example, I don't think we're going to see too much significance. The major risk still remains below it. For some obscure, absurd reason, these talks fail at the final hurdle, then I think the downside could be quite significant. But I don't think that's what's going to happen. I think a lot of positive negotiations have happened more recently, and we're getting very close to a deal.